Welcome to Stock Talks with Akash. Follow this channel to create a money mindset.
Hey, hi there. Welcome back to my channel. And today, in this video, we'll be learning all about return on equity. So, let's get started. So, what is return on equity? Let's go simply on by the words. What is return on equity? It is nothing but the return that you generate on the equity. Now, what is return? Return is nothing but profits, right? It's nothing but profits on equity is the money that you have paid to the company. What is that money called? Shareholders funds. That's it. That is return on equity. Profits divided by shareholders funds. So how you do calculate profits? It's nothing but the PAT. You could get it on from the annual report. And shareholders funds, what does it consist of? It consists of share capital, that the money that you have put, plus reserves. That's it. That is nothing but ROE. So now let's calculate first what is ROE. Let's go directly to the website and we'll be calculating the return on equity for Infosys. So first that we need was PAT. PAT we will get from profit and loss. Okay, let's calculate it for March 2024. Let's calculate for this one. Okay, so let's go down. Hmm. Oh, so my pen sometimes doesn't work. Over here, it's net profit. What is net profit? It is 26.233. Let's just quickly put it in the calculator. It is 26.233. 26.233 divided by, do it down. It was shareholders funds. We will get it from balance sheet. Balance sheet, shareholder funds comes under liability section. Over here you could see shareholders fund. It consists of share capital and reserves. Right, now let's see what is the shareholders funds. It is 88,116. So let's again go to the calculator. It's divided by 88,116. What comes out to be 0.29. It is 29.77%. To get a percent, just multiply it by 100. 29.77 we have calculated for March 2024. So let's just see if we have done it right. uh, let's go to ratios. Let's scroll down. 29.77, here it is, and that we calculated was 29.77. So you got the gist. How do we calculate the return on equity? So now next come is the interpretation part. Okay, how will you interpret uh, the return on equity? Is that by comparing it with itself, or by comparing it with its peers? And of course, when you are comparing it with peers, it's not a stone to stone comparison. Okay, someone would be earning 29% on a lower equity, and someone would be earning the same amount but with a higher equity. So that there's a difference. You need to consider that in mind while you compare the ROE of different companies. Of course, the more the better. So in let me just see, in March 16, its return on equity was 21, and right now it is 27.88. So it has increased over the years. It has decreased in between, but that is okay. So it should be consistent at least, right? Now you need to know the risk associated with ROE. So sometimes what happens is that ROE is manipulated intentionally or unintentionally. How can it be manipulated? It could be easily manipulated by these accounting entries. So PAT could be manipulated by, let's say, for example, an exceptional item. So exceptional items are one-time earnings. It could be from an asset. The company has sold one of its assets, so the earnings from that sold asset comes into the profit. And one example for share capital and reserves is it very famous is, of course, the debt. Company takes debt which it actually doesn't need it. In both the cases, ROE could increase. How it is? That if the PAT increases, the numerator increases, ROE increases. The second one, if the debt increases, then the denominator actually decreases because debt is not considered in the calculation of ROE. Debt has to be deducted from the share capital. So if the denominator decreases, of course ROE increases. So by these two things, ROE could be inflated. So let me just show you an accounting entry example. Let's go to Raymond Lifestyle. It just recently got demerged from the Raymond Group. Let me show you what is its return on equity. If you could see over here, its return on equity is 94.02. And let's see what is its PAT. Let's go to profit and loss. If you could see over here, it has reported loss in the same year in which its ROE is greater. Why? Because of this entry. Let me just go to down. If you could see, here it is. Its profit is inflated. You have to just download the annual report to see from where this has come. So I hope you get the gist. Let me just quickly summarize it for you. So how is ROE calculated? It's by PAT divided by shareholders funds. You have to be very cautious when you are looking at a high ROE, and you need to analyze it why it is so much high. Either if it is profits is inflated due to accounting entry or due to its excessive debt. And of course, the ROE is different for different sectors. So make sure when you are comparing the companies, you actually compare an apple with an apple. not with an apple with a vegetable, right? So you need to compare an apple with an apple, and also not the both apples could be same. One could be a bigger or one could be a smaller. So that also you need to keep in mind. It just generally states the profitability of a company. How effective is the company utilizing the money that it gets from the shareholders to generate the profits? That is what ROE tells you. I hope this video was useful. Thank you for watching, guys. Have a great day. Bye.
Disclaimer: the information provided is for educational and informational purposes only and should not be considered financial or investment advice. I am not a SEBI registered investment advisor or research analyst. Investing in stocks involves risk, including the potential loss of principal. Always conduct your own research and consult with a qualified financial advisor before making any investment decision. Past performance is not an indicative of future results, and all investment carry inherent uncertainties. The author and associated parties are not responsible for any financial losses resulting from the decision based on this information. This channel does not promote any form of current returns or insider tips. Always invest responsibly. Thank you.